our business may go into trouble because we are taking decisions that tend to go against what the environment is telling us. Interest rates are usually very key issues. They're very controversial many times. We need to be aware what direction is likely to take. But many of us, in my experience, many times, because we are hard pressed in many areas, taking time to assess the environment, many times we don't do that macroeconomic environment, because then it tells us if direction is going this way, what are we going to do? If prices are rising in a particular area, maybe falling in a particular area, what are we going to do? If we don't have that, I think it will affect us negatively.
Equity model actually brings in the concept of how do we tie in and make sure that we are banking the entire chain and the customer becomes cognizant of the fact that it is cheaper for me to do everything in a single pot. One of the biggest issues that came up, the switching happening in the region is a bit too high. And the SMEs don't see that, but it is actually evidently one of the reasons as to why there is a very high debt uptake in the region.
Equity Bank comes from Kenya. I also saw their rates in Kenya is different from that of Uganda. Their rates in Kenya range from 13 to 16%. But in Uganda, equity charges from 18 up to 20. So I request the presidential advice. May you go and advise our dear president that the banks are stifling the businesses in Uganda.
I think most SMEs are at the crossroads on whether to digitize or not. So what you hear as is my business overburdened on tax might actually just be a question of is my business ready for adoption on the digital side.
You know, we are playing